Hundreds of thousands of federal workers just got pink slips, and it changed your mortgage overnight. Let me explain. As of this week, somewhere between 177,000 and 277,000 federal roles were eliminated through Elon Musk's DOGE initiative. You get that number when we combine voluntary exits and forced layoffs. The unemployment rate is projected to rise to 4.3% by early 2025, reflecting a 0.8 percentage point increase. And here's what's happening. Mortgage interest rates fall to their lowest levels this year. And at the center of it all, DOGE. Is Musk saving the economy or burning it down? Let's dive in. First thing, the DOGE initiative, the Department of Government Efficiency. Since January, it's reportedly eliminated somewhere in the realm of 200,000 federal positions. Not 20,000, 200,000. That's bigger than many entire companies. Charles Farinella, a fired IRS agent in New York. I don't know what I'm gonna do at this point in time. I might have to look to sell my house because I don't have a severance or anything, he said. I feel pretty much devastated. DOGE claims these cuts could save taxpayers up to $9.2 billion monthly, but the watchdogs warn actual savings may be far lower. The critics are calling this a wrecking ball for local economies, while Mr. Wonderful says,
I think the issue is they're not whacking enough. There's this concept in private equity when you get a bankrupt company and you go in there, you cut 20% more than your initial read. And then you find like a pool of mercury, the organization gels back together again. Always cut deeper, harder when there's fat and waste.
Congressional Democrats are furious and frustrated, and they're sounding off.
I can tell you that this dude is probably one of the most unintelligent billionaires I have ever met or seen or witnessed. Which, you know, you can probably even glean that from watching these people on TV. This dude is not smart. And the danger in the lack of intelligence and the lack of expertise that Elon has. I mean, this guy is one of the most morally vacant, but also just least knowledgeable about these systems that we really know of.
All while MAGA Republicans cheer Trump's Drain the Swamp crusade.
The fraudsters, liars, cheaters, globalists, and deep state bureaucrats are being sent packing. The illegal alien criminals are being sent home. We're draining the swamp and we're restoring government by the people, for the people.
But either way, here's where it gets wild. Something most were not anticipating. These layoffs could actually push mortgage rates down further by funneling cash into bond markets when laid off workers cash out retirement accounts. Here's how this works. When big layoffs happen, unemployment ticks up. That spooks investors who often move money into safer bonds. That can drop the 10-year Treasury yield, which is tied directly to mortgage rates. Goldman Sachs predicts the 10-year yield could plummet 50 basis points if layoffs accelerate, while they also predict Trump's tariffs cause inflationary trade wars. Nonetheless, mortgage rates recently fell below 6.2% for the first time since August of 2024. So if you're buying a home or refinancing, this could be your moment. And this is just phase one. Leaked documents show Musk wants 200,000 more jobs gone by July. And there are whispers about Tesla's Project Phoenix, a blockchain-based mortgage platform. It's got Wall Street buzzing. And when you think Tesla, mortgage, coincidence? Celebrity real estate broker Mauricio Umansky calls today's market Schrodinger's market. Prices are up in some areas, down in others. According to brand new data, 19% more $1 million plus listings in DC, 14% fewer middle class home sales, and 33% of luxury sellers caving into buyer demands, like contingencies. Schrodinger's quantum software predicted this crash, and now Wall Street's using AI to short your neighborhood. Quantum computing has arrived, and it's just the beginning. So while high-end homes flood the market, middle-class spots, they're stalling. It's a split reality, and Musk's layoffs may be at the center of it all. And here's what you need to know. The Federal Reserve is watching unemployment like a hawk, because historically, in 2008, a 1% rise in jobless rates led to 1.38% drop in mortgage rates. And in 2020, we hit 10.2% unemployment, and mortgage rates fell to record lows near 3.13%. So if this wave of government layoffs grows and jobless claims soar above 287,000 a week, the Fed might step in with rate cuts. That's great for borrowers, but terrible for job seekers. And layoffs in Washington, D.C., they spread like dominoes. Displaced workers are moving out, leading to Redfin reporting a 22% spike in D.C. area motivated seller listings since January. And half these homes were listed in the last 30 days. This is panic selling at its peak. And this isn't just D.C. Musk is gunning for 7 deep state cities next, like San Francisco, Denver, and Austin. Is yours on the list? Because nearby states are bracing for a flood of job seekers and possible house price dips. And we're just 72 hours until the next DOGE layoff wave hits. And get this, every 10,000 layoffs can dump around $450 to $650 million into bond markets, thanks to 401k cash outs. So when bond demand rises, yields drop, and so do mortgage rates. So is Elon controlling our housing destiny from behind the scenes? Critics say he's gaming the system, slashing government jobs so bond markets react and mortgages get cheaper. Others argue it's just standard supply and demand. Less money and paychecks, less spending, and the market corrects itself. Either way, the result could be historic rate drops. And Elon is hosting a Tesla mortgage demo days before the next Fed meeting. Is that coincidence or a calculated strike? Why is Blackstone buying every foreclosure in Kansas City? They're betting $20 billion that your misfortune becomes their 12% return. Stay tuned. So there are 3 ways to profit before this window closes. 1, consider the refinance. Keep your eyes open for rates to suddenly drop. Rates could bounce back quickly if the Fed decides to clamp down on inflation. There could be a small window of opportunity there. Second, look for high government area deals. Places like DC and Northern Virginia, Denver and Kansas City. They might see more inventory and lower prices if these layoffs continue. And the third thing is watch for Fed announcements. An emergency Fed meeting could change everything overnight. So stay alert for rate policy updates. Musk's DOGE initiative might reshape the American housing market, causing rapid layoffs, shaking bond markets, and slashing mortgage rates in real time. But here's the million-dollar question. What are you going to do about it? Because right now you've got 2 choices. You can sit back and watch these changes unfold and hope you don't get caught on the wrong side of the economic tsunami. That's what most people will do. Or you can position yourself to catch this wave at exactly the right moment. Because while everyone else is paralyzed by uncertainty, I've developed a system that's helping regular people like you turn this market chaos into their biggest opportunity. I'm not just talking about saving a few bucks on a mortgage rate. I'm talking about a complete blueprint that's helping everyday people land their first real estate deal in 45 days or less, without the headaches, without the hassles, and without needing any previous experience. I'm talking about a complete system where we literally do most of the work for you. You see, we go out and we find the deals, we contact the sellers, we analyze the numbers, and we even guarantee that you'll walk away with $10,000 in equity and $300 of monthly cash flow on your very first deal. And you can get all the details at epicapprentice.com. But here's where it gets really interesting. We've built this entire thing around you. We start by mapping out your personal real estate DNA code, then plug you into our 12-week program that's helped countless people just like you close deal after deal. You'll get access to everything that you need. Our AI-powered seller simulator to help you master negotiations, our seller sniper system to find killer deals, and a complete system that's helped regular folks just like you close deal after deal without the typical real estate headaches. Plus, I'm giving you direct access to funding, so money never stands in your way. And my team will even contact sellers and analyze deals on your behalf. Think of it like having a complete real estate business in a box. I hate that expression, but that's kind of what it is, with me personally guiding you every step of the way. But here's the thing, we're pretty selective about who gets in. So if you're actually serious about building real wealth through real estate and ready to take action, head over to epicapprentice.com right now, answer a few quick questions, and let's get you your first deal in the next 45 days. Because while everyone else is waiting for the perfect moment, you could be closing your first deal just weeks from now. The choice is yours. epicapprentice.com. Thanks for watching. I'll see you next time. Take care.